Good morning, everyone. This is Med City CPA, and I'm reading through the IRS publications, getting ready for the 2018-2019 tax return season. And I'm looking at publication 225, Farmer's Tax Guide, for use in preparing 2018 returns. And I'm reading through here, and I found some interesting things that I wanted to make a video about. So in 2018, there's some changes that I guess I didn't know about, which I find interesting. So they made some changes specific for farming. Cash method of accounting. Beginning in 2018, a farming business may use the cash method of accounting if its average annual gross receipts for the preceding tax years is 25 million or less. Oh, that sounds pretty nice. I'm guessing a lot of farmers will make less than 25 million gross receipts over the preceding 3 years. Inventory. Certain small farms with average gross receipts of 25 million or less in the preceding 3 years are not required to maintain an inventory. That's pretty amazing. So if you average less than 25 million of gross receipts in the last 3 years, you can now do cash method of accounting, and you're not required to maintain an inventory. That's pretty amazing if you choose to do that. Business and interest expense liability, or limitation, standard mileage deduction, those changed. The excess farm rules have been replaced with the excess business loss rule, so a little bit changed there. Might be a change. Most taxpayers no longer have the option to carry back net operating loss. So net operating losses arising in tax years ending after 2017 can only be carried forward. The 2-year carryback rule in effect before 2018 generally does not apply to net operating losses arising in tax years ending after December 31st, 2017. Exceptions apply to certain farming losses and net operating losses of insurance companies other than a life insurance company. So they changed, this is the other thing I wanted to point out, they changed the net operating loss rules for tax years ending after 2017, but there's an exception for certain farming losses. So that's something you might want to look into if that affects you or your specific situation. Increased Section 179 expense deductions, they raised that. Depreciation of certain farm property. So they changed it from 5 years instead of 7 years, The recovery period for certain farming machinery and equipment placed in service in 2018 is 5 years instead of 7. Farming businesses are no longer required to use the 150% declining balance method for 3, 5, 7, and 10-year property used in a farming business placed in service in 2018. So kind of some interesting like-kind exchanges, limitation on personal casualty and losses. I don't know if that affects a lot of people. Disasters, you kind of figure out if you have a disaster, if you're in a disaster area. Net operating loss rules have changed, and a net farming operating loss arising in 2018 must be carried back 2 years instead of 5. An election can be made instead to carry the loss to a subsequent year. So before we were going to talk, I don't know why they didn't just put these together, but whatever. Here it says we're talking about the net operating loss, that they changed it. You can no longer carry it back except for certain farm losses. And here they're saying a net farming net operating loss arising in 2018 must be carried back 2 years instead of 5. So they're shortening that NOL carry back, but they're still saying you can make an election to go forward. Okay. New withholding rates, that's kind of standard across the board. Let me see if there's anything here. Maximum net earnings. Yeah, that's pretty standard for 2019 to keep your eyes in the future. Self-employment tax and Medicare tax are going to be moving ahead for next year. So that's pretty standard. I just wanted to point out that's kind of interesting that they changed that. So cash method of accounting, and inventory changes if you have annual gross receipts of 25 million or less in the preceding 3 years. And then the other very important thing is the NOL, net operating losses. They changed it for specifically for farming and as well as everyone else, given an exemption for farming exception. So something to look into. You might want to read up on that. It might be helpful. I don't know your specific information, but something to consider when you're looking through the filing your taxes and talking to your tax preparer. Hopefully this has been helpful.